Good evening, traders, and welcome to BCI's Evening Market Outlook. As we wrap up today's session, global markets continue to react to rising fiscal concerns, shifting geopolitical dynamics, and evolving monetary policy expectations. So here's what you need to know. First up, let's talk a bit about the US economy. Moody's recent downgrade of the US credit rating has intensified global concerns around debt and deficits. The fallout was evident in weak 20-year Treasury auctions, pushing the 30-year yield to 5.1%. Japan's 30-year bond yield surged 40 basis points to about 3.14%, possibly reflecting reduced Bank of Japan bond purchases or broader fiscal anxiety. The US is also reigniting some currency discussions with trading partners like South Korea, citing undervalued exchange rates as contributors to trade imbalances. This sent the $1 rate briefly to 1,370.75 and triggered broader weakness across Asian currencies. As uncertainty mounts, investors appear to be moving away from US assets, diversifying into gold, Bitcoin, and the Japanese markets. This trend reflects a cautious but clear shift towards alternative stores of value. Crude oil remains volatile amid a complex mix of supply headlines and inventory data. OPEC is reportedly considering a 411,000 barrels per day output increase in July, which is hinting at a partial unwind of 2023's deep cuts to satisfy surging summer demand, particularly from the Middle East. On the geopolitical front, upcoming US-Iran nuclear talks appear tense as the US demands that Iran halt all uranium enrichment, a stance that reduces hopes for sanction relief and additional Iranian supply. US inventories for crude, gasoline, and diesel all posted unexpected increases, heightening demand concerns. However, a weakening US dollar offered some support to prices. Overall, traders still remain on the edge with OPEC decisions, geopolitical risks, and fundamental data all driving near-term sentiment. We'll talk a bit about my favorite gold as well. Gold has found some strong footing above the $3,300 level after pulling back from its April highs. Despite a 50% gain in 2024, gold remains under-owned. Only around 1% of global assets are under management are currently allocated to the metal. With central bank purchases still strong, investment flow is expected to recover. The stage may be set for a significant upside. If gold upsides return to their ETFs, return to their 2020 levels, we could see prices climb by as much as $600. Strategically, a 5% allocation to gold offers a compelling hedge in today's uncertain environment. With sticky inflation, growing tariffs, and geopolitical risks all in play, gold could test the $4,000 level this year and potentially reach $5,000 within the next 5 years. That's all from me today for this evening market wrap-up. Keep an eye on those bond markets and central bank rhetoric as we head into Friday. Until then, stay informed, stay sharp, and as always, trade smart.